Welcome everyone to Maverick Trading. Today we're going to explore the Theta switch. So when you think about Theta, there's some traditional thought processes of, oh, if I do this strategy, then it's guaranteed to be this, Theta positive, Theta negative, and so on. And that's actually not accurate. So we're going to dispel some of the preconceived erroneous thoughts, and we're going to explore how it's all in option trading. It's more about location than it is strategy, and we'll touch on that. So let's talk a little bit about Theta before we get too far in. Just what is Theta in general? Well, here you can see if you look at the Theta column on both calls and puts, they're always negative numbers. Always, always, always. Theta is shown as a negative. And what does it imply? Well, it implies that options are decaying assets, which they are. It implies that you will eventually hit expiration, which you will, right? So let's say that this was 30 days to expiration, okay? So 30 DTE, 30 days to expiration. The theta represents the daily decay. So if we just snag one of these, that's 11 cents, negative 11. That means that that option is currently eroding 11 cents per day across 30 days, right? So that's its current amount of decay, and you will arrive at expiration in 30 days. And it's the extrinsic value, it's the time value that's decaying. And that theta number will be changing over time. It will be typically increasing, but not always. It kind of depends. If it's a way out of the money option, if it moves deep in the money, you could have less theta because now there's just less theta to decay. If an option moves way out of the money, then it will have so little value. Well, the theta will be very small because a 20-cent option only has 20 cents of total amount that it can decay. So if there's still 20 days to expiration, it might be decaying about a penny a day, right? It'll just be a low theta number because it's so far out of the money. And you'll see that here. If you look way out of the money or way in the money, the theta numbers will be smaller. Notice 5 cents and 5 cents, whereas if you go more at the money, 15 cents. Okay, at these at the money strikes. And the same thing is true on the puts. Way out of the money, 4 cents of decay per day. Way in the money, 4 cents of decay. If we look at the at the monies, 14 cents per day in decay. So theta can be drawn like this in that the peak here are at the money options. At the money options will always have the highest amounts of decay. Deep in the money or way out of the money options will have much less decay because that's just how they trade. Deep in the money options are mainly trading for their intrinsic value, and then they have a little bit of extrinsic, of time value. And way out of the money options, well, they just are low priced. There's just not much decay potential because there's not much value in them. This is only a 30-cent option. That's all it can decay, right? So it's going to have a low theta number accordingly. So those theta numbers are important to understand, and we always draw theta kind of like this, where it's a gradual decay and then it really gets worse and worse as you approach expiration. So if you were thinking about all these options and you say, well, this one's currently at 15 cents per day, interestingly enough, imagine the stock just stays here. Let's just picture a stock kind of flatlining for the next few days. That theta will keep increasing. So it'll go to 16 and 17 and 18, 19, 20. It'll just keep jumping. And as you get really close to expiration, the week of expiration, you can find thetas that are 50 cents and 80 cents. And it depends on the instrument. If it's a really high price stock and high priced option, then you can have dollars of decay. If you're looking at SPX index options, it can be $10 of decay per day. So it depends on the asset and on the instrument and how much total value is there. And if it's a really high priced option, the theta numbers will be higher. If it's an at the money option, the theta numbers will be higher. And if you're closer to expiration, As you get close to expiration, the theta just goes into overdrive, and there's massive amounts of decay. Now, if we look at this from a risk navigator standpoint, this top one is the risk navigator at Interactive Brokers. And here I just pulled an example. It says, okay, the stock's trading at 38.06. We've got $1,000 of profit. It gives us our delta right here. We have 159 delta. That's adding up the delta of the entire position. Here you have it in dollars, which is just simply this times this, if it's a stock position. So we have 159 delta and the stock's at 38.06. It's basically $6,000 of delta value. That's putting it into dollar terms. But you have a 159 delta. You're short 8 gamma, you're short 2 vega, and see it's theta positive. I wanted to show this. In this particular trade, this tells us something. This tells us that we're making money, we're theta positive, we're making money from decay. Okay, so if today turns into tomorrow, we make about $3 just on the decay. Now, we might have lost money on the options overall. We might have lost because the delta went against us or because the gamma or the vega. But based on the theta, we know we're going to pick up that $3, right? Everything else being equal, we would make $3 overnight. You can also see the same thing down here. If you look at a variety of positions, each one will have its own individual delta. Each one will have its own gamma and its own vega and its own theta. Now, each position you take, you can actually pull it up on the Risk Navigator or at ThinkorSwim, and you can see exactly what your theta is. If it gives you a negative theta, well, if you're negative theta, that means you're losing from time decay. If it gives you a positive, we're making, right? That's a positive theta. We're making some money on that stock, just kind of flatlining. If it flatlines, we'll pick up $72. $5, we'll make 51, we'll make 27. Most of these are theta positive. All of these are theta positive, and it adds up to the grand total of 244. So this is a summary adding up all of those. Well, right now, 244, we're making $244 per day on time decay. But again, there's some risks, there's some trade-offs. Not all of these thetas are guaranteed to stay positive, and that's what we're going to talk about today is how trades can shift. And when you pull up a risk graph, you'll tend to see there will be the at expiration risk graph, which is the blue line on this chart. And then there will be a progression line. And that progression line will move towards the blue line over time. But notice that it's different, right? This one's progressing down, and that side's progressing up, and then this side's progressing down. This red line, and ThinkorSwim has a really nice tool where you can kind of fast forward and see how it works. But the progression of this tells us what? Well, we're progressing towards the blue line. So if we're on this side of it, we're actually theta negative. We're losing money over here as the stock stays where it's at. If the stock's at 95, look at what this line's going to do. It's going to progress towards a loss. Every day it's going down here towards the blue. If we're up here, we're theta positive. We're progressing towards a gain, right? This is every day. It's going climate. We're making money. We're up here in the positive area. Over here, once again, we'd be theta negative on this trade. So when somebody said, this is an iron condor, when somebody says, I'm trading an iron condor, we naturally think, oh, you're making money from time decay. Well, that's not accurate, right? It's not, you can't just say, well, I'm in an iron condor, I'm for sure theta positive. That might be how it started, but your trade could have shifted, meaning the theta switched, and the theta switch areas are right in there. See that where it crosses The blue, those are the theta switch areas where now you're actually losing if you stay in this day after day after day. Your theta, it might have started positive when you first put this trade on. It is now a theta negative if the stock stays where it's at, which is in the wrong location. Remember I said it's all about location, 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 right? If it's in the wrong location, we're actually progressing towards a loss in this case. So let's come over and explore this together. And I purposefully picked a really expensive stock and one that's going to have some crazy high theta numbers in Tesla and so forth. But what I wanted to show was the progression of this and kind of show the details of it. So let's go build a hypothetical. We'll just go with the July, short term, and we look at this 725 is where the stock is at. Let's go build a spread, and we'll play around with a couple of different things here. But let's say we were going to build a bull put spread, okay? Now, when you do a credit spread, you would traditionally think, okay, well, I'm going to collect money. I'm going to collect a credit. I'm profiting from time decay. And that's how this would be built initially. So if we look at it, we're going to sell the 710 put, buy the 705 for protection. Here's our risk graph. Let me spread this out a little. And you'll see this purple line here. Now, in this credit spread, here's where the stock is at. So if we were to look at this, this is currently theta positive. Think about where the stock is at, and if the stock stays here, here's the question. If it stays right where it's at, are we better or worse off? Did we make something or lose something? And watch. If we hit the progression here, watch what happens over time as this trade progresses towards July 15th expiration. If the stock stays here, see how we're progressing profitably? That's going up. We're in the right trade in that we're making money from the stock staying where it's at. But you'll notice if you were looking over here, let's imagine that we get into this trade and the stock goes the wrong way. In this case, it went down. And it's sitting here at 690 or something like that. Now you could ask yourself, well, am I theta positive anymore? No, you are not. You are theta negative if it's in this location. Why? Because if it stays right where it's at, what's happening? Watch the loss we're going to take. Currently, we're down. This says we'd be down if this was July 11th and the stock was down here. We're down $127 with it at 690. Watch. I'll go forward a day. Did your loss get better or worse? Worse. Now we're down at 133 bucks. Did it get better or worse? Worse. Now we're down 150. You are not theta positive in this trade. The theta has switched on you. You are now theta negative, right? You're losing from time decay. So don't think for a minute, well, I put on a credit spread. If I sit in it, it's going to get better and better with time decay. No, no, no. It's in the wrong location. If the stock goes back this way, well, yeah, now you'd be better off if with some time decay, but not on this side. And that's how these trades work, it's all dependent upon where you're at. When you build these trades, let's nuke that one and come back to Tesla. Let's do one that's deep in the money. Okay, instead, we're going to sell a put spread that's up above the stock. Now, that'll pay you a much higher credit and so forth, right? You'll get a big credit for this $5 spread, but here's the problem. The problem is that this thing starts in a theta negative fashion. Now, that might be okay. That might be what you want, but let's kind of drag this over. So here's where the stock is at right now. Okay, here's where the stock is at, and we need to go back to today to kind of get this back. Okay, here's where the stock is at. You put the trade on, you're at break even, of course, right? You're not up, you're not down, you're just breaking even. But let's see the progression. If, imagine you stay right here. is it getting better or worse? Well, it's getting worse, right? This is just going to keep dropping down to where, see how that purple line, now we're down 55 bucks. Now we're down, you know, $100, and it can get as bad as being down 190 bucks, which is our max loss. We progressed towards a losing position. This started off as a theta negative, as a working against us trade. It was not, even though it was a credit spread, it was never profitable from time decay. If the stock had gone up into our zone where we wanted it to be, well, then that progression would have been helping us, right? And then this is jumping up, and we're making money from the time decay over here, but not on this side. Not on this side. And so that theta switch area, you can just kind of see where that purple line and that blue line, you know, match. It's kind of going to show you a little bit of the progression of this thing, where it kind of, here's your break even at expiration. So anything above this, you're going to be profitable, but anything below that, you're going to be unprofitable. And usually that theta switch area is just right around the break-even mark. That's kind of the dividing line, so to speak, in terms of that trade. Let's go ahead and put this one on. The only reason, let me hit a market order just so that I we get assured of an execution. You wouldn't normally send a market order, of course. That's a very bad idea. But I just wanted it to execute. And I wanted to show you, come and look at the theta. This was a credit spread. We put on a credit spread. We collected, you know, 300 bucks or whatever. Look at it. It's theta negative. See how it shows you? No, you're losing money from time decay, right? This one's like Apple. Apple's seems to be losing money from time decay. Well, so's Tesla. That is a losing, you know, you're losing about $6 per day if you just stay where you're at. If this stock stays where it's at, we're going to take a little loss, take a little loss, take a little loss, even though it's a credit spread. The same thing is true with more complex strategies. Let's mix it up a little bit. We'll go to a different stock. Let's say we were going to trade Target or something. Target's at 148. Hypothetically, we were going to do an iron condor or something like that. Now, let me show you a little funkiness here to this. Let's bring it down to just a simple one contract. But watch this. What if we did the put spread in the money and the call spread out of the money, or something like that? Something like that. So look at what we've done in this iron condor. Our bear call spread is way above. It's like 10 points above the stock. But our bull put spread is actually in the money. So our whole window is right up there between 152.50 and 157.50. The reason I did this a little quirky is to show you that now the put side of this is probably theta negative, because if we stay where we're at, this loses, right? But this side's going to be theta positive. The net effect is still probably theta negative. Whoops, do we already have something on this? I don't know if we do. Let me delete that. So here's that trade we just built. Now, I'm gonna go ahead and transmit this so we can look at it and explore it a little more closely to make sure this is making sense. But see, the stock's out here. Stock's down here. So we've constructed the iron condor in a way where it's targeted. We need the stock to go up. If it goes up, well, now we're theta positive. But where we're at, watch the progression of this. We're losing, right? We're progressing in the wrong fashion. We're losing, losing, losing. We'll end up at max loss if it stays right where it's at. So this is not starting off as a theta positive. It'll start as a theta negative trade. Let's just send a market order so it executes. So we got $1.70 credit. One would think, well, that should be a theta positive. No, not, it's basically neutral is what it's showing, but it will turn theta negative. I think it's neutralized right now pretty good. But if we were to look at each leg individually on this and look at their theta numbers and add them up, you'll see why this is the case. So if we look at it a little more closely, watch this. Let me change this to that column, delta, gamma, theta, vega. So watch, we're buying the 150 put, so we're losing 20 cents a day there, but we're making about 17 cents a day there. We're making theta of 9 and we're losing 6. So we're making 3 cents on the call side, but we're losing, you know, a couple on the put side. So that's why it's basically theta neutral right now. We're at kind of a theta neutral. I mean, that's as neutral as it gets, right? That's basically zero. It's not even $1 a day. We're at theta neutral, but we do know that the progression of this, interestingly enough, is going to be theta negative, because see, the progression is if we stay where we're at, this is going to get ugly. Right now, come back to today, there's just not much decay. It's neutral. So even as today turns into tomorrow, it didn't budge. See that? It didn't really move. The next day doesn't really move. The next day didn't really move. But then you get into that following week, and that's where it starts to budge. See how it's now dropping, 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 and dropping in dramatic fashion. So it will turn, you know, theta negative. It's basically a theta neutral trade right now, the one we just built, but it will progress towards a bad situation if we just stay here. We will have to have, at some point, we will have to have that stock move this way to be successful. Now, if it moves this way, then it becomes a nice theta positive trade, because now days go by and this thing is jumping towards max profitability. So it's important to understand these components of how the theta will switch on you. It can start positive and turn negative. It can start negative and turn positive. It can start neutral and go one way or the other. It's all about location, location, location. Well, I hope you've enjoyed this class on the theta switch. Some important details there to understand as it pertains to your trading, and also the ability for you to look up what the theta is on your position and understand that position a little bit better. Have a great rest of your day, and we will see you next time. Goodbye, everyone.